Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup, which seems to be rather weak at this point of time. The SGX Nifty is indicating a downtick of almost 50 points, which means that we'll come close to the 10,700 mark in trade. So overall, global equities are trading weak in trade today. Now, if you're looking at the ADRs, most of the ADRs ended with losses in excess of 1%. So Vedanta, Tata Motors and ICICI Bank were down almost close to 1.5%. Wipro was also down in trade. The only exception was HDFC Bank, which was up almost 1.1%. Infosys was up almost 0.7%. Now, as far as crude is concerned, crude at this point of time is trading slightly flat in trade, but yesterday did manage to rally close to 1%. So Brent is trading close to the $73 barrel per mark, and WTI is coming in close to the $68 barrel per mark. Most of the base metals did manage to move in much higher. Aluminium was up almost 3%, copper was up 1%, nickel was up almost 2.4%. The only exception was lead, which was down 1%. Even if you're looking at what's happening in China currently, aluminium is up close to 0.7%, and steel is trading up over 1% in trade. Most of the precious metals are trading with a positive bias. As far as fund flows are concerned, FIs were net sellers in the market. They sold in 520 crores. DIs bought in 165 crores in the cash market. But what happened among some of the sectors in focus? You had the Nifty Bank, which managed to move up in trade, but there was selling that was happening in the mid caps and small caps in trade yesterday. Some of the sectors that didn't do well in trade, the Nifty IT, the Nifty Metal Index was down 3.5%. Even if you're looking at the real estate space, the PSU banking space, there was significant amount of weakness that was seen on these counters. What's happening as far as the Nifty was concerned? What contributed? Private sector banks, Kotak Mahindra Bank, HDFC Bank did manage to contribute. ITC and HDFC were the other two contributors. On the losing end, you had ICICI Bank, HCL Tech, as well as Vedanta, which caught selling pressure on the market. But Agam, what are you spotting on the FNO side?
Sure, Darshan. Given that we have the SEBI circular, which indicates that we are likely to see an increase and a requirement of an increase in margins, we're likely to see, well, a decline, at least as far as your volumes are concerned in general. However, these changes will be effective from the 1st of June 2018. But when it comes to yesterday's day of trade, well, we are looking at not too much change with respect to the open interest in the Nifty futures. It is the same for the Nifty Bank futures as well, where we've seen, well, the underlying remain largely flattish. However, we have also seen an uptick in the India Volatility Index, which still remains below the mark of 13. So that should provide comfort for those who are long in the markets for now. But when it comes to the Nifty put call ratio, that remains unchanged, currently at around 1.52. What we've also seen is most amount of activity in the 10,500 call out here, or rather put out here, as you can see. And this is where we're looking at a lot more base formation over the previous 3 to 4 years. We've also had something like an IRB Infra, which has moved into the band, and we're looking at fresh longs in Ujjivan Financial, along with Amara Raja Batteries, which has also moved up. And on the other hand, a lot of profit taking coming as far as NIT Technologies is concerned. Do remember, it's had a very strong past couple of weeks, and now we're looking at profit taking. In fact, its open interest now surging by as much as 13% towards shorts. So we'll have to wait and watch whether or not we do see a little bit of recovery as far as NIT Tech goes. That said, moving across to Bloomberg's Stephen Engel to give us the headlines from across the globe. Listen in.
Chinese official telling Bloomberg that Beijing won't accept any U.S. preconditions, such as abandoning its long-term advanced manufacturing ambitions or narrowing the trade gap by $100 billion. Well, the world economy showing signs of stabilizing after a recent moderation, with manufacturing activity strengthening for the first time this year. IHS Markit's factory PMI across more than 40 countries rose to 53.5 in April from March's 6-month low of 53.3. The numbers reinforce advice from economists at Goldman Sachs and JP Morgan Chase not to bet against the world economy just yet. Well, President Trump's massive fiscal stimulus plans are adding to the U.S. debt overload and forcing the government to drive up bond issuance as the Fed shrinks its balance sheet. The U.S. Treasury is boosting the amount of long-term debt it sells this quarter to $73 billion. It also is investigating adding another 5-year sale to its regular calendar and planning to issue a new 2-month bill later in 2018. Well, the political consulting firm at the heart of the Facebook data manipulation scandal is shutting down. Cambridge Analytica says it's filed to begin insolvency proceedings in the United Kingdom, citing what it calls numerous unfounded accusations as a major reason for ceasing operations. It says it's being vilified for activities that are not only legal but widely accepted in online advertising. Global news 24 hours a day, on air and on TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Stephen Engel. This is Bloomberg.
You're at a Fed meeting where there is no press conference, really almost ruling out entirely that the Fed would make a move on rates. The question becomes, what's going to happen next? What happens at the June meeting and beyond? And so these subtle changes of wording are something that Fed officials, when they write these policy statements, know everyone around the world is going to be parsing very, very carefully. And the Fed did acknowledge in its statement that inflation has moved close to 2%. So yes, looking at reality, telling us what's there, but not exactly beating the drum in sort of a victory dance, which suggests they're ready to really step up the pace of rate hikes. And here's why. Let's look at a GTV chart that is a very simple, very powerful chart to look at inflation, which the Fed is looking at too. Yellow line, 2%, that's the target. Turquoise line, the PCE deflator, the Fed's key measure. Yes, it's a 2%. Core PCE deflator taking out food and energy, very close behind. But in fact, Bloomberg Economics pointing out that the fact that the core isn't quite there yet may show that the Fed is not entirely convinced that they're fully and firmly at the target. Plus, they might be wondering, is this sustainable? That chart shows you that at least once in the last year, the Fed got to 2%, and then it fell back again below 2%. So maybe they are being cautious. And here's what they said in the statement that people looked at pretty closely, because they talked about a symmetric target in the past, but they added this word, symmetric, in this very important statement. Inflation on a 12-month basis, first of all, they acknowledged that it's near 2%. They said it's expected to run near the committee's symmetric 2% objective over the medium term. Why is this important? Again, I want to come back to something Bloomberg Economics wrote today, and that is that what others have said as well. This seems to be a clear statement from the Fed. Look, we're willing to let inflation run a little bit hot. Yes, it can run over 2%. Why? Because it's run below 2% for so long. Again, the door is open. Will the Fed do 3 hikes? Will they do 4 hikes? Maybe they don't yet know either, and that's why they're sending us the right signal. They're moving towards gradual hikes. No sign of a speed up here yet.
There's no question that, trade tensions, if they turn out to be that way, which I don't think will happen, will be very bad for emerging markets generally. Well, the world in general, but emerging markets. The interesting thing is that I recently came back from Washington. We were talking with the IVC about export-led growth. Well, that's over for a lot of emerging countries. The exports are not a big deal for many of these countries. It's now internal growth, and that's particularly true in China. So the end of trade exports for some countries is not going to be a big deal. And I think they can stimulate the economy by internal growth. So if you ask me which countries are you interested in, I'm interested in those countries where internal growth is fast. China, India, in some parts of Africa, in some parts of Latin America. If you look at Brazil, for example, big consuming country, and they can do a lot internally to produce goods that they actually consume. If China, let's say, is shut off from exports to the U.S., they're going to have to turn towards other parts of emerging countries, particularly Southeast Asia. In order to do that, they've got to stimulate exports from those countries. So there's going to have to be a complete, and it's already happening, by the way. If you look at trade in Southeast Asia, the major trade partner is China already.
Back to local equity markets. Talk of the day is Godawari Power and Ispat and back. A good set of earnings reported by the company yesterday. If you look at the top line growth, the company has reported a 29% uptick on year-on-year basis, consolidated to a number of around 743 crore as compared to 573 crore that we've seen in the corresponding quarter. If you look at the bottom line performance, it's a 6-fold jump there to a number of around 101 crore as compared to nearly 15 crore that we've seen in the corresponding quarter. EBITDA performance has been healthy healthy for the company, more than twofold jump there at a number of 207 crore as compared to nearly 102 crore that we've seen in the March quarter of the previous year. Margins have shot up to 28% as compared to nearly 18% in the corresponding quarter. What has led to good set of numbers, higher sales and the cost-saving techniques which have been adopted by the company has led to a good operating performance. If you look at the raw material cost, that as a percentage of net sales has come down to 54% from 58% earlier. Other expenses too have dipped for this company to a number of around 15% of your net sales as compared to 21% of your net sales that we saw in the corresponding quarter. Besides that, tax credit and higher other income along with your good operational show has led to a good bottom line performance by the company. The company has reported higher PAT despite the kind of exceptional expense of around 19 or 20 odd crore that we've seen in this March quarter. Also, the company has incurred a tax credit of around 29.53 crore in this quarter as compared to a tax expense of around 3 odd crore in the corresponding quarter of the previous year. Segmentally, what has been going good with the company is the steel business, which occupies 88% of your total revenues, which has shown an uptick of around 18 odd percent. The power business, which contributes to the remaining 12%, also has increased, but then the flattish growth of around 5 odd percent. If you look at the operational performance segmentally, the gains belong to the steel business, which occupies 77% of your overall EBIT performance. That has inched up more than 3-folds. In fact, the power business, which occupies the remaining 22% of your EBIT, that's actually shown a downtick of around 7%.
Let's get your check on the commodity space, starting off with oil prices currently trading about 0.2% in the negative. However, we did see a surge of nearly 1% for WTI overnight. Now, this was largely on account of the dollar weakness and the US inventory data. So the dollar actually weakened, however, managed to close positive after the Federal Reserve kept the rates unchanged. Also, that US crude oil inventory rose as much as 6.2 million barrels for last week as per a report by EIA. Now, looking at the base metal space, the London Metal Exchange base metals index in fact surged more than 1% overnight, and the rally was led largely by aluminium and nickel, which surged more than 2% each, and copper also managed to gain more than 1% for itself. Now, the LME aluminium cancelled warrants surged as much as 11%. That was the most in about 2 weeks. And on the other hand, we had lead, tin and zinc, which closed lower for the day. Now, if you look at the Shanghai Futures Exchange, base metals are trading with a mixed note, with zinc trading negative and Shanghai Steel gaining more than 1% for itself. As far as gold prices are concerned, we saw some bit of uptick come about for gold prices, but not much after the Fed left the rates unchanged, currently trading at about near the 1310 mark for an ounce.
Interglobe Aviation reported a weak set of numbers in the fourth quarter of financial year 2018, which was also way below the analyst estimates. Now, if you see the company's revenue, now, though that increased by around 20% compared to last year, the company's EBITDA, that is earnings before interest, tax, depreciation and amortization and rental cost, declined by around 16% compared to last year. And this is the biggest ever decline that the company has seen since listing. The company's margin, that is the EBITDA margin, that came in at around 19.4% in the fourth quarter of financial year 2018. And this is the lowest ever margin reported by the company since listing. And on the net profit front, it saw a big fall of around 73%, which is the biggest fall that the company has seen since listing. Now, 3 factors that led to such a big decline in the company's fourth quarter earnings. First is the fall in decline, second is the higher fuel prices, and third is the foreign exchange loss. Now, if you see the yield that measures the average passenger fare per kilometer, that came in at around 3.3 rupees for Indigo in the fourth quarter of financial year 2018, and this is the lowest ever yield reported by the company in at least 3 years. Now, this is because the company had to lower its air tariffs because of the intense competition in the industry, and the competitors were also reducing its tariff, and to match the prices, the company had to lower its tariff, which resulted into such a low yield for the company in the fourth quarter of financial year 2018. Secondly is the fuel prices. Now, on an average, the fuel prices were high by around 11.5% compared compared to last year. And this chart clearly shows the impact of higher fuel prices on the cost structure of Indigo. Now, the fuel cost as a percentage of the total revenue of Indigo, it stands at around 40% in the fourth quarter of financial year 2018, which is the highest in at least 3 years. Now, the company's highest fuel cost as a percentage of revenue was around 37% in the second quarter of financial year 2017, and in this quarter it has increased and is at its highest point of around 40%. Lastly, it was the foreign exchange loss that the company saw in the fourth quarter. The company reported a foreign exchange loss of around 93 crore rupees as against a foreign exchange gain of 160 crore rupees. Now, as majority of the cost for an airline company is dollar denominated, this foreign exchange loss against a foreign exchange gain had a net of impact of close to 250 crore rupees on Indigo. The company also held its conference call yesterday, and in the conference call the management said that they are looking to resolve the neo engine issue problems that they are working closely with Pratt & Whitney, and they intend to resolve this neo engine troubles very soon. The management also has given a future growth guidance. They expect their available seat kilometer to rise 25% compared to last year in financial year 2019. Now, they have also said that they expect their cost structure to come down as and when they start purchasing more aircrafts, and they in financial year 2018 they purchased 3 aircrafts, and going forward, that is in financial year 2019, they will be using the free cash flow to purchase the bigger aircraft, that is the Airbus. Lastly, they also said that the company is planning their long haul route and long haul international routes without Air India.
Amongst the two stocks that really stand out in terms of their numbers that they've posted for the fourth quarter and came after market hours are Mahindra Logistics. That's one. The revenues saw a sharp jump of 23% and the net profit grew at a much faster 71%. Even if you look at the operational performance for Mahindra Logistics, the EBITDA came in 85% higher than the net margins rose from 2.8% to 4.3%. That's the EBITDA margin picture. So strong set of numbers coming in there. You also have Aztec Life Sciences, revenue growth of 48%, net profit growth of nearly 5-fold to 17 crores. Operationally also strong performance, EBITDA growth of 85% and margins rising from 19% to nearly 24%. So we could see some positive reaction on the back of those numbers. That apart, you also have Biocon, which has said that they've received 7 observations under Form 483 from the US FDA, and this is for the Bangalore facility. However, they have said that these are more procedural in nature. Let's see how that stock reacts. That apart, what we're also watching is PC Jeweler, where Fidelity Funds have sold 1.19% stake in PC Jewelers in the open market on April 27. That's according to stock exchange disclosures. So that's what we're tracking now. The stake for Fidelity is down to just 7.04%. We're also tracking Madras Fertilizers. Now, the company has said that the ammonia and urea plants have shut down due to critical naphtha inventory that they hold. So negative development for the company, because it could really mean impact on the revenues and sales. Sikal Logistics has received a letter of acceptance for the overburden at Amlori for 1,345 crores. Keep an eye out on that one. Mukund Limited is another one where they've allotted 20 lakh equity shares to Japan's Sumitomo on the back of a preferential allotment basis, and the price is 579, much higher than the company's current market price. After that, what we're looking at is Finiotex Chemicals. Now, they've said that they're looking to expand the value-added business, and for that, they have engaged a global M&A advisory to look for acquisitions of up to 200 crores. So watch out for that name. You could see some reaction there. And lastly, you have Tridan Infra, which has received an order worth about 57 crores. Smaller company, smaller order win size, but you could see some reaction there.
Earnings that we'll be tracking throughout the course of the day will be Vedanta to begin with. We are expecting a decline coming in the bottom line performance of the company on year-on-year basis. However, sequentially, we're expecting a good performance by Vedanta. If you look at the top line growth on consolidated basis year-on-year, we're looking at an uptick of around 11.5% to a number of around 25,000 odd crore. EBITDA has seen, however, is coming seen down by as much as 2.5% to a number of around 7,100 $176. The margins are expected to shrink at 29% as compared to 33%. PAT is seen declining by 14% in this counter. In terms of the segmental performance, we are expecting only oil and gas performance to be good both sequentially as well as on year-on-year basis for this company. Aluminium, iron ore and zinc India business is expected to do well sequentially, but not so on yearly basis, on account of which you would see a 5 to 6% kind of uptake in the operational performance of the company sequentially. Oil and gas business is expected to rise 39% year-on-year basis and 17% sequentially. Aluminium business is seen down 26% year-on-year, but we are expecting an uptick of 26% on that counter. Hindustan zinc business, as we know, has reported a 3% decline year-on-year basis, but an 11% rise sequentially. Impairment loss of around 18 billion due to closure of Goa iron ore mining is expected to weigh down on the bottom line performance of the company. The key things that we like to keep an eye out will be the progress of ramp up of 1.25 MTPA smelter. Along with that, the movement in base metal price. In other earnings also, we have Adani Ports. Somit, how are the numbers looking like?
Well, for Adani Ports, the numbers are expected to be strong. Now, if you see the revenue, that is expected to be high by around 18% to close to 2,600 crore rupees, while the EBITDA is expected to rise by 36% to close to 1,815 crore rupees in the fourth quarter of financial year 2018. Now, margins are expected to expand to around 69% versus 59.8% reported by the company last year, while net profit, however, is expected to decline by around 12% to close to 1,000 crore rupees. Now, this is because of the higher tax rate and lower other income in the fourth quarter. Now, the company's Mundra port is out of the tax holiday period, because of which the tax rate is expected to be higher for Adani Ports in the fourth quarter of financial year 2018. Now, the top line growth is expected to be decent on the back of growth in logistics business and the SSE income. The volume growth is expected to be in the range of 14 to 18% for Adani Ports, mainly on the back of sustained strong growth in crude and container volumes. However, the coal volumes are expected to remain muted in the fourth quarter due to lower power generation at Adani Power's Mundra power plant. Now, the realizations are expected to improve compared to last quarter on the back of the higher container mix. And lastly, key things to watch out for would include the SEZ and free cash flow income that the company sees in the fourth quarter of financial year 2018, and also the revenue and cargo guidance that the company gives for financial year 2019.
Let's get your check on what stocks you need to keep on your radar based on yesterday's delivery buying and selling. First stock that you have to keep on your radar, that would be Signed. Now, ever since its result, it has been surging, and yesterday too saw a surge of about 6% and saw delivery buying of more than 55 crores. The delivery volume actually more than doubled at 119% at about 7.5 lakh shares as compared to its 5-day average, and the total volume surged nearly 90% at nearly 20 lakh shares as compared to its 5-day average. Second stock to watch out for, that would be SAIL. Now, that was down about 6% in trade and saw delivery selling of more than 65 crores. The delivery volume surged 110% at nearly 70.5 lakh shares as compared to its 5-day average, and the total volume surged about 75% at nearly 2 crore shares as compared to its 5-day average. Last and final stock to watch out for, that would be Sun Pharma. Now, that was down about 2.5% in trade and saw delivery selling in excess of 200 crores. The delivery volume more than doubled at about 40 lakh shares as compared to its 5-day average, and the total volume surged about 70% at nearly 62 lakh shares as compared to its 5-day average.
Well, you find a lot more just like that on the website bloombergquint.com. You'll also find several stories that you can read. First up, the cabinet has given its nod to doubling the investment limit under the senior citizen pension scheme to 15 lakh rupees, guaranteeing a minimum pension of 10,000 rupees a month. The government has approved an ordinance to amend a law for speedy disposal of commercial disputes in a bid to improve India's ranking in the Ease of Doing Business Index. Right, that's all you need to know going into trade today. Do stay tuned for a lot more on Bloomberg Quint, starting with Indian Open. That's right up next.